You guys have asked me for the past 2 years to make this video, so you guys better watch this video to the end. Hey, how's it going, guys? Stat345 back here with another video. So in this video, we're going to be talking about stocks 101. We're going to be talking about everything that got to do with stocks, what stocks are, how they work, how to buy and sell stocks, everything you need to know in one video. So this video isn't going to be like any of my typical videos where I have a lot of jump cuts and editing, because I wanted to be like authentic as possible, and I wanted to feel like I'm talking to someone that's in the same room as me. So there's not going to be a script with this. We're not going to edit anything. It's just going to be me talking to you and giving you basically simple like how-tos and like information regarding stocks. All right, so with that being said, let's get into it, because you guys have been blowing up my inbox for the past 2 years, especially when that GameStop and AMC thing went by, asking me how to get into stocks, how to do that, all that information about stocks. So this will be the video for you. All right, so what is a stock? Stocks are a type of security that gives the buyer ownership of a company. So what exactly does that mean? So when you buy a stock, you essentially own a share in that company. That doesn't mean, like, say for instance, you buy a share in like Walmart, Target, or Best Buy or something, and you go to those stores telling the manager or employees what to do. Even though I know a lot of y'all do that anyway, that doesn't mean that type of ownership. You don't own or have any authority in the company. All you own is a share or a security in that company. So what that means is your money is invested into that company's equity, and then in turn, they use that money to make more money. So for instance, you buy a couple of stocks, they can use that money to make products, advertisement, new production, all that type of stuff goes into that company. And if that company is good with your money, they invest that money properly, and then they increase equity in that company, and in turn increase the value of the stocks of that company, making you money, right? So how do you make money from stocks? You make money from stocks by selling them at a higher price than you bought them. So if you bought a stock for $30 and you sell it for $50, you just made money. Or dividends, or regular payments to shareholders. So dividends are pretty much interest on a stock. And I'm trying to slow down, but my like ADHD and my brain is racing, so I'm trying to slow down. So dividends are pretty much interest quarterly that you earn on a stock. So overall, our government says that the stock market gains 10% annually. So pretty much you will earn interest off that annual percentage, and that's what those dividends will pay you, right? So those are the two ways to make money from the stock market: buying and selling stocks at a higher price, or dividends, which is that interest you will make. All right, so things you need to know, right? Invest long term. What does that mean? That means if you're getting into stocks thinking it's like crypto where it's high validity, then you're going to be sadly mistaken. Stocks are a long haul game. Like, you're not going to get into stocks like 1 week and then all of a sudden a stock is going to go up to from $50 to like $500 in a week. That's generally not going to happen. Like that AMC and GameStop thing was probably like a once in a lifetime thing, and that's only because the internet came together to do that. I highly doubt these companies let that happen again, or if it does start to happen again, they're going to try to stop that. So if you're betting on something like that to happen, don't get your hopes up. So along with invest long term, you want to have a diverse portfolio. So how you have like people throwing all this money into one certain crypto, or like people are buying 1 or 2 stocks in the company, if you do that, you're not going to make any money in the long haul. You want a diverse and full portfolio, like Warren Buffett, Nancy Pelosi. All of them have money invested into different companies, and they all own a huge shares in those companies. So I'm not saying that you can't start off buying 1 or 2 stocks, but make sure when you're investing, you diversify your portfolio and you put a lot of chunk of change in it and buy up a ton of shares, because in turn that'll make you a lot more money in the long haul when you to sell off those stocks. Research. Research is key to buying stocks. Like how you would in turn build a portfolio is by doing research. Like every good portfolio starts with research. You want to know what the company is looking like, what the production is looking like, what any new projects they got going on, how they're investing their money. All of that needs to go into your research, because the more you research a company before you buy into that company, the more you can gauge on where that company's future is going. So if I gauge a company that has like $5 million in equity and they have all these new projects coming out and they got all these different investors in something, that's something I might want to look at, because in turn that company could grow, making my shares and stocks grow in price. If you're reading about a company in the news that has like bad publicity, that can cause the stock to go down. If you're reading in the news about a new product coming out, that could cause the stock to go up. It's just all in the research. So make sure you do your research on companies before you buy into those companies. Two main stock types. You have a common type, which is basically your regular buy and sell stocks that's for public consumption by regular people like us. So stocks like Tesla, Microsoft, Google, all those are public companies that you can buy into like anyone. And then you have preferred stocks, and they get a set amount of income each year from dividends, and that's because their money is in the forefront. So say for instance, like you have like a group of friends, right? And then you have your initial investors, and then you have like that's your best friends, right? And then you have like people who come and put a little bit money in at the end, right? The people who put in the most money generally are the preferred stocks buyers, because their money is in the forefront. So their money comes first. So say for instance, a company files for bankruptcy and they decide to liquidate all their assets off. They're going to be the first ones to get some of that liquidation, because their money is the forefront of everybody else's money. So pretty much they're putting a larger stake in the company than anyone else is, because their money is on the line in the forefront. So pretty much from here, the more a company makes, the more money you make. The less a company makes, the less you make. A good thing to know when you're getting into stocks is don't ever follow the hype, like how crypto is, like how somebody can tweet out, hey, this crypto, like somebody famous, hey, this crypto, da 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 da, and you see a whole gang of people start buying that crypto. Stocks aren't typically like that. You just have to do your research and check on the market. You always want to watch the market, because that will dictate how good a stock is going to do. Other than that, that's pretty much what a stock is, different type of stocks. Let's move over to the computer, and then I'll give you that portion to show you guys what a stock looks like. So now that I pretty much told you and summarized what a stock is and what they do, we're going to take a look at some stocks so I can break down what the stock is saying and what the page is saying. Like I said before, this isn't scripted or anything, so I'm going to pretty much talk to you like I'm sitting next to you, or like if you're sitting across from me trying to learn something. Things to know: the stock market is not open on the weekends. So don't try to buy or sell stocks on the weekends, because you won't be able to. The stock market is open from 9:30 to 4 p.m. So make sure you get your buys and sells in before that. If you try to sell, the thing that's going to happen is it's going to queue it up to sell or buy. And then once the market opens the next day, you'll be able to buy and sell that stock. Okay, so now that we got that out account, you see right here we have some Tesla stock. So the first thing you want to do in order to buy and sell stocks, you want to open up a brokerage account with a firm. So my firm is TD Ameritrade. You can do your own research into different firms. Me personally, TD Ameritrade is the easiest one for like beginners. Don't use Robinhood at all. Don't use them like at all. But yeah, like do your research first and decide which one is best for you. Just don't use Robinhood. All right, so we just look at Tesla Inc. Like I said before, TD Ameritrade makes it pretty easy for you to read it. You got your buy and sell button. You got your closing price, meaning that at 1026.96, that's what it ended at the end of the day. That'll show you how much it went down. So 3.54% to the high of that day, which was January 7th, was 1080, and the low was 1010. And the volume is the amount of shares being traded on average for that stock, right? All right, so come down here, you got your triggers. So you have a trigger called stop loss, a trigger to stop you from losing money, right? So say for instance, right, we set our trigger, like say we wanted to stop loss at 1025, meaning that it won't hit this low. So at 1025, it'll automatically sell off that stock so we don't dip below our set price point. So you can set up a stop loss to pretty much stop yourself from losing money, and to alerts, same thing as like stop loss. Instead of actually doing it though, it'll send alerts to your phone. So if the price, if it goes too low, you can set an alert for that. All right. Historical quotes, meaning you can, that shows pretty much like which is pretty self-explanatory. And like crypto though, it's less volatile, so you'll see sometimes more stagnant prices in stocks than they would in crypto. That's why I always tell people, stocks are like a long haul game. Like sometimes stocks will jump, like as you can see Tesla here, within a year it jumped from like 600 all the way to 1200 at its peak. But stocks are a long haul game. You're not getting in, nobody gets into stocks to really like flip money. That if you want to do that, you can try crypto and mining and stuff, but you're not getting into stocks for a short haul. All right. And like I said right here, you can see all your information, your close, open time and close, which was January 7th at 4 p.m. Like I said, the stock market closes at 4 p.m. You can see your ranges. You see your market cap, which is at 1 trillion. Your P/E ratio. That's something you don't really need to worry about when you're just like going in. That's part of your research phase. And like I said before, research, TD Ameritrade has a lot of research for you, like a bunch of news articles and everything, so you can pretty much research all. I'm gonna be real with y'all. That's pretty much it with stocks. Like there's literally no other way. Like there are a bunch of videos online that go into extreme detail that you don't really need to know when buying and selling stocks. I mean, if you want to do it for educational purposes, honestly, that's as simple as it needs to get when you're buying and selling stocks. Like all that other information, unless you're planning on being a stockbroker or planning on going to business management, you don't really need to know. That's pretty much as simple as I can make it. If you guys want me to do a scripted video where I get more time, but as far as like me making another video about this, that's all I can do. Like that's literally why I haven't made this video like at all. As in the next video, peace.